Thank you, Mr. Chairman. Good afternoon, and a warm welcome to everyone joining us today. Let me provide an overview of the financial performance for the second quarter and half year ended June 30, 2023. Revenue from operations adjusted for excise GST grew up 13.3% year-on-year in quarter 2, 2023 to the level of 56,114 million. Sales volume grew by 4.6% to 314 million cases in Q2 CY 2023 from 300 million cases in Q2 CY 22, driven by growth in international markets. Sales volume growth in India got affected due to abnormally high unseasonal rains throughout the quarter. CSD constituted 73.9%, juice 7.3%, and packaged drinking water 18.8% of total sales volume in Q2 2023. In the second quarter of 2023, there was a notable improvement in net realization per case, which increased by 8.3% to reach at rupees 179 per case. This improvement can be attributed to the continued increase in the proportion of smaller SKUs, such as 250 ml, in our portfolio compared to the corresponding quarter last year. Our gross margins during the quarter improved by 196 basis points to the level of 52.5% from 50.5%, mainly due to softening of patch chip prices. As a result of higher gross margins and operational efficiencies, EBITDA also saw a notable increase of 20.8% to rupees 15,110 million, with EBITDA margin improving by 169 basis points to the level of 26.9% in Q2 2023. Depreciation increased by 12.3% and finance costs increased by 49.5% in Q2 CY 2023 on account of capitalization of assets and setting up of new production facilities. PAT increased by 25.4% to the level of 10,054 million in Q2 2023 from 8,020 million in Q2 2022, driven by growth in revenue from operations and improvement in margin. As of June 30, 2023, our net debt level was amounting to 31,716 million, showing a decrease from 34,096 million reported in December 22. It's worth noting that the net debt figure includes approximately rupees 9,000 million of CWIP and capital advances allocated for the capex planned in Maharashtra, Uttar Pradesh, and Odisha for 2024 season. These investments are expected to drive our growth and expansion in key regions. Our financial leverage remains solid and a debt equity and debt EBITDA ratios standing at 0.48 and 0.96 respectively as on June 30, 2023. In H1 2023, the net capex amounted to rupees 19,000 million, primarily for setting up of new greenfield production facilities at Bundi, Kota, Rajasthan, and Jabalpur, MP, for rupees approximately 8,500 million. Brownfield expansion at our 6 existing facilities in India for approximately rupees 6,500, and brownfield expansion in international markets of approximately 3,000 million, and approximately 100 million towards land purchase for capex in future years. The net capex includes capitalization of CWIP and capital advances amounting to rupees 12,000 million, which was outstanding as on December 22. As on June 30, 23, the CWIP and capital advances of 9,000 million are towards greenfield expansion as stated in Maharashtra, UP, and Odisha. Working capital days increased to 21 as on 30th June 23 from the level of 17 days in June 30, 22 due to untimely rains. Overall, we are committed to maintaining a strong financial position and continuing to focus on our growth initiatives. At the same time, we are dedicated to optimizing our operational efficiencies, which we believe will ensure long-term sustainability and create value for our stakeholders. On that note, I come to an end of the opening remarks and would like to now ask the moderator to open the forum for any questions or suggestions that you may have. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Maybe 500-700 crore more, and rest at the time of capitalization will be coming in. In India, the total capex may go up to 2,400, 2,500.
So just to get it right, so let's say first half you have done just under 1,800 crores. You are saying the second half cash outflow on capex will be about 500-600 crores from a cash flow perspective.
Maybe 800-900 crore, I say.
800 to 900 crores. Okay. Where do you think, Mr. Gandhi, where the peak debt settles at?
In fact, debt in the H1 has come down, and we may come back to the last year debt, and we will have 4 incremental plants with us. 1 piece are operational, 3 mentioned in India, and 1 in DRC. So basically,
right.
All these, if you see on overall basis, all these 4 plants will be funded out of internal accruals.
Right. So what you're saying essentially, let's say 3,700 crores is where the debt will peak at?
Should be around that. Yes.
Got it.
100 crores
And
now.
okay. And the next one is on the energy drinks. How was the quarter for energy drinks? In the second quarter.
Vivek has stated in the earlier calls, exact numbers we will not be giving, but on trend-wise, the journey is continuing.
Okay. And lastly, on the standalone, business, if I look at it, there is no real, operating leverage, this time around, despite which, let's say the margins are at about 28% or so. Where and we have seen in the past, where you have done, let's say 28.5. So had it not been for this poor volume, the margins could have been far better, probably, let's say 30% ballpark. Is that a fair assessment?
Let me put it slightly differently. See, the expectation, I think 169 basis point in the COGS, I have stated there was an improvement. This has come up because of softening of the commodity pricing, basically PET. And operating leverage, actually, in this quarter, there had been increase. If there would have been further increase, you are right, maybe, half a percentage point or percentage equivalent, there could have been an improvement. We can't deny that.
Sorry, Mr. Gandhi, what I was referring to was, let's say, the standalone numbers. So, because your revenue growth is 7%, there is a gross margin expansion for sure. But the growth has been somewhat lower than what I'm sure you would have been eyeing. In that context, the standalone.
You are absolutely right. If the growth would have been normal and the season would have been normal, we would have had a much better margin. But this is not, you cannot plan it, and we don't say this for long term, because depending on the pricing, we have always said that the EBITDA margin would be around 21, 22, not more than that. That's what we like to commit. But obviously, if the season is good and you get better commodity prices, you get a blip on it.
Got it. Mr. Jaipuria, if I can just follow up on that, that's exactly my point. So, if I extrapolate, seasonality and full year number, your guidance is, I get a sense if we, look at what your, let's say, growth targets are, et cetera, the margins can be higher than what your guidance is. What am I missing in that?
No, you're not missing anything. It's just that we don't like to give a guidance better than that. And if we have a good season, and this second quarter is our biggest quarter, so this margin will always be higher in this. I am talking annualized basis, 21-22% is reasonably high, and that's what we'd like to say. Beyond that, we don't like to say. If we get a good commodity advantage or something better happens or a special season comes, I don't want to deny that we can't do better.
Got it. Thank you, and wishing you all the very best.
Thank you.
Thank you.
Thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead.
Yeah, sir, on Zimbabwe, now since many years we have seen very robust, healthy growth in this market. So can you help us understand that market a little bit in terms of what is the industry growth, who are the main players there, and if you are growing faster than the industry, who is really sort of growing at a slower pace to balance the equation out? Some flavor on that, please.
Well, I think, Percy, it is very difficult because no numbers are published in that country. And we ourselves also can't understand that country after 6 years. So it's very difficult to understand that country, but it's a great country. We are seeing huge growth, very positive, and obviously our main competition is the Red. And if we are growing faster, then somebody is getting hurt. So I can't answer you more than that.
Okay, but like anything that you are doing there which you would attribute your success to, I'm sure that you are gaining market share and you would have probably crossed 50% kind of mark by now. So is it that the other players are not very focused on that geography or something like that, or are we doing something right which we can replicate in the other geographies maybe, because we are not getting the same kind of market share gain in the other geographies also?
I don't want to say they are not focused. I think we are more focused.
Sure. And just wanted to understand on the capex part. I think in the last call we had mentioned that on a full year basis the capex would be about 1,500 crore, and now that number is sort of going up by more than 1,000 crore. It seems to be like on a cash flow basis the capex will be more than 2,500 crore. So what has really changed in this 1 quarter period for such a big difference?
I think the main reason is basically we want to enhance our capacities of...
Percy, that 1,500 number, apple to apple is 1,900. What number we discussed 2,900 or so is for the season 2024. So for this year, it is 1,900. So it's a difference of 400 because TRC.
Because that 400 is actually being put in a new territory which was not part of India, and that is DRC Congo.
Okay. So is this just a preponement of capex that you would have planned over CY23 plus CY24? Or is it that the total capex of CY23 plus CY24 also will go up and not just this year's capex?
No, but every year there will be a capex. What we are saying is we had said about 1,500 crores for 23 and 400 crores additional, about $50 million are being put in DRC to start a new country. So that is what it is. Next year's capex will be again there.
Okay. And versus that 1,900, it seems more like this year will be 2,600. So that difference of about 500 to 600, what is the reason for that, sir?
That will not be, Percy, that will not be capex for this year. For next year, it will be sitting in our balance sheet, CWIP. When we were reconciling the debt figure, that mention comes because out of 24 capex, a part of which will be spent ahead of time.
Right, but this 1,500 crore number that you had given last quarter was also on a cash flow basis only, right? Or was it on a balance sheet basis?
That was on capitalization basis.
Okay, understood. Yeah, that's all from me. Thanks, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Nihal Jham from Nuvama. Please go ahead.
Yes, sir. Good evening to the management. So just if you could give me the India volumes first to start with, if that is possible.
India?
I didn't hear you.
Volume.
I'm so sorry. I was asking the volumes in India.
Yeah, India, there is a growth, but it was
It was very small. This quarter, the India growth has been very small.
Understood. The other thing was, if I just look at versus the juices segment has seen a contraction. Any specific reasons for that happening?
Yeah, the main reason is our juice plant, which is in the north, which produces, we only service the north mainly with that for Tropicana, PT and dairy. That because of the north rains, it was depressed. And we normally don't send product from here to south and west. The freight is too high, and that's why we are putting up a plant in Maharashtra and in the east in Gorakhpur.
Understood.
And it was absolutely abnormal rains this year we had in the north.
Sure, Mr. Jaipur. The next question was, to the earlier questions on margins. We are currently having a favor of how the raw material prices are playing out, and historically we have increased our discounts to distributors, ideally to drive volumes when margins have gone up. So is that also a thought in the coming quarters that we want to say normalize the discounts which were maybe taken down last year, and maybe that is one of the reasons we don't want to change our margin guidance too much?
See, discounts keep on getting adjusted. These are through the marketing spend schemes. Their commission structure doesn't change, but over and above that, there are a lot of incentives, and those are performance-based. If the volume goes up, they earn more incentives, therefore more commission for them. And if the volumes don't go up, definitely they don't earn those extra incentives. So this year, it's basically as it's directly linked to the volume, it's not that they made higher. Yeah. And last year, there was so much of volume growth that they made so much of money, and rather, apart from the company, they have also co-invested with us in vehicles and other things. So we are much better equipped through the distributors' infrastructure to face the next round of growth, maybe next quarters in this year or in the next year.
Thank you, Mr. Gandhi. Just one last question, if I may. Given the way we've obviously turned around a lot of the territories, and if I look at some of the awards that you've received, definitely we do rank among the top bottlers from Pepsi's perspective. Now, where my question is coming from is that today, while we found a subsidiary in South Africa, and currently it is still a discussion that is currently happening. Are there other international geographies that we will simultaneously look at entering, or it will mainly be that maybe right now we'll see how this discussion goes, focus on maybe South Africa and Congo for the next year, and then look at whether we incrementally want to go ahead and move into other international territories, or it is as and when the opportunity comes, we look at taking them on?
See, we are constantly discussing with Pepsi. As India, we have already taken most of it, and there's very little to grow in this except organically. So any market which looks good, which is good for us, and Pepsi is willing to work with us on that, we are looking forward to it and expand our territory.
Sure, Mr. Jaipur. Yeah, that was it from my side. Thank you so much.
Thank you.
Thank you. The next question is from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Sir, hi. Thanks for the opportunity, and congrats on a good set of numbers in a challenging quarter. Sir, June quarter was obviously impacted. So just wanted to check how is the situation now, as there are still evidences of disruptions on this front.
So even in the disruptive quarter, we have done well. So I'm sure we'll do well again. We'll keep you guys happy. Don't worry about it.
Great, sir. Second, sir, we have been successful in bringing Gatorade to a very accessible price point of rupees 20. So firstly, I wanted to check how difficult it is for competition to bring this offering at this price point. And second, if you could share the trends for our new growth drivers, Gatorade, dairy, and juices.
So our key growth drivers are energy drink, our juice product, which is the Nimbus product, Tropicana, our dairy products, and Gatorade. So these are the new products, and also our sugar-free drinks, which are doing extremely well, which is 7-Up and Pepsi Black. So I think there are a lot of new categories which we are doing extremely well, and that's why we've been able to sustain a bad quarter like this.
Got it, sir. And from a distribution footprint perspective, all these new growth drivers, are these, to what extent of our network are they currently available, and what is the plan going ahead in terms of expansion?
See, dairy is not available apart from North. Dairy and Tropicana is more focused in the North right now because of our capability of the plant being only in North, which is going to change for next year's season. We'll have complete capacities available for West and South as well as East. So there we see a major expansion, which is our Nimbus, which is our Tropicana juices, Gatorade, and energy drink, of course.
Got it, sir. Lastly, sir, just to understand this capex bit better, so in H1 we have done 1900 crores, which includes the CWIP that was created of about 1200 crores. So cash flow perspective, it was about 700 crores in H1. And then we have created another 900 crore of CWIP, which amounts to total 1600 crore of capex. But the amount that you are indicating is about 1900 crore. For what purpose is this additional 300 crore that is going to be used? Is it for, yeah?
I had just said that it's for the international market, which is DRC Congo. There's a greenfield plant coming up there.
So that is included in 1900. So it PPT mentions that 1900 includes that 300.
The RECO of this is already given. 1900, one is that 850 for Rajasthan and Jabalpur plant. It's on sheet number 15. And brownfield expansion 650 crore at 300 crore international subsidiaries. And paid for lands ahead of plant constructions for future, because the acquisition of land takes at times a lot of time, 100 crore for that. And
no, sir, I get that. I'm on that sheet itself. I wanted to understand the cash outgo for CY23. So this mentions that in H1 we have done a capex of 1900 crore, of which the cash outgo 1200 has already been done in CY22. So actual cash outgo is 700 crores in H1. And then we have additionally created the CWIP of 900. So total it is 1600. But the number that we are giving is about 1900. So just wanted to, in second half, what is this additional 300 crore that we are going to do?
So that is the capex. These are the cash flow, because there was some cash other than this in the international market was also sitting in the CWIP. So basically capitalization is 1900 and the money spent in H1 is 1600. 300 is coming from the definitely either is outstanding or is coming out of the CWIP or the capital account advances with the suppliers.
Got it. And last thing, sir, this working capital days have increased to about 21 days. So what is this? Is this largely raw material or finished goods?
It is partly both finished as well as raw material, because the season was not as per planned, and normally we get rid of our goods by end of June. This time we had to take it to July.
Got it, sir. Okay. Thank you so much.
Thank you. The next question is from the line of Vatsal Dujari from CLSA. Please go ahead.
Hi. Thanks for the opportunity, sir, and congratulations on a good set of numbers. My question is on the line of distribution reach. What is the progress in terms of number of outlets and vehicular infrastructure?
In fact, we update in our presentation at the year end. Otherwise, we latest figure which was given 925,000 is the and at the year end we once a year we update this figure. And distributor network, the next question is about 3.3 million, which we have already in the past discussions. Retailers, we have already stated.
Okay. And in terms of the South Africa expansion, could you give us some sense of the size of the opportunity there in terms of how does it stack up versus the other international geographies we are currently present in?
I think South Africa at the moment we would only like to say that we are looking at the market and it's a bit too early. As soon as we have something concrete, we will get back to you.
Okay. And thank you so much.
Otherwise, the industry size is at least equal to 50% or higher than India.
Okay. Yeah, that helps. Thank you.
Thank you. The next question is from the line of Omkar Gungarde from Shree Investment. Please go ahead.
Yeah, good afternoon. My question was regarding once the entire capex is done and all the new facilities are commenced, what kind of total revenue potential it can generate?
With these new plants coming up, actually the thumb rule is, whatever capex we do, 2x of that once the plants are stabilized and they are working fully, the revenue which can come up. So with 2,900 we can expect 5,500 or 5,800 capex. Yeah,
so around 2x asset turn you are expecting on this. That's
right. It's very simple. The thumb rule is, for example, my ROC today is 30 plus and depreciation 5-6%, 36 or something. So 1.8, 1.9 times you can take it.
Okay, and a rough figure of how many million cases that would be servicing?
We last year we did 800 million. So this year in H1 I think 11% growth is here. Maintain same. So 900 plus. So
capability is much more, but of course depends on the season and how it works, because our quarter was very subdued this one, so that's why it's not showing the numbers. But otherwise, the capability of production is much higher than this.
So that's what I'm asking. With the full capacity and once the new capacity.
I won't be able to give you exact numbers, but we can produce reasonably high double-digit numbers.
Okay, with the expanded facilities, right?
Absolutely.
Okay, another question is on the product categories. I mean, if we look at the international markets where Pepsi Wild Cherry, Pepsi Mango, Pepsi without caffeine, these products are available. I mean, how do you decide to bring a new product to Indian markets or other markets?
So that it depends. We work with Pepsi and we bring one by one products what we think are going to work and the market is tested. And after that we choose one product at a time because it has to be marketed, it has to be distributed. So there are thousands of products available in the market, in the international market. I mean, it depends what suits the Indian palate.
Okay, but any deciding factor on that? Like, how do you choose it? Like, or what stops us from doing?
We market it in the market, see the feedback from the people before we put it across all markets. So test markets are done, and then after getting feedback from the reasonable size quantum, then we decide what product will work in this market.
So let's say out of 100, how many, say 100%, how many percent is currently available?
There is no specific, pardon me? No, there's nothing available. I mean, there are thousands of products. There's nothing.
Okay.
So every market has different things. Apart from the key products, which is your Pepsi, Mirinda, 7-Up and Mountain Dew, those are your basic key products. Otherwise, there are thousands of products. Pepsi itself might have 20, 30, 40 variants.
Okay, so as far as India is concerned, you would say that you have just scratched the surface. You can say like that?
You can say that, yes.
Okay. Just wanted to know what's the progress on the milk-based products, dairy products, and what kind of growth you will be looking at there. As you said that it would be the next category that would lead the growth for the company.
It would be one of the categories that would give growth, because we are setting up, we are tripling our capacity on that. So, and it will be available in west and south as well as east. But we are doing the same for Tropicana juices and Nimbus and some other categories. So, production-wise, next year we will have no shortfall like we had in 2022.
Okay. Any ballpark figure which you can give about the growth in the international markets? How much it was in volume terms?
So again, these markets have done well. We are further enhancing some capacities where it is needed, and the markets are doing well. So all our international markets are growing and doing well. We expect the same to continue.
Okay. Just one final question. The earlier participants have already asked about South African thing, but just wanted to know what made you form the company in South Africa then?
Because we are looking at it, that looks like another big market after India. So we are looking at it very seriously, but till we have something finalized, we can't tell you.
Okay. As Mr. Gandhi said, it's 50% bigger than India, right? In terms of...
No. It is not bigger than India, but it's a large market. Per caps are much higher than India.
Correct. So he was talking more about 50% higher than in terms of per capita.
Per caps, there was an error there. Its per caps are much higher. It's a large market, but it's error by slip of tongue.
Okay, but what could be the size of the market if you compare with India?
It is more than a billion case market, so it's a large market.
Okay, a billion case market. Okay. All right. Thank you very much.
Thank you. The next question is from the line of Satadru Chakraborty from Chakraborty Family Office. Please go ahead.
Hello, good evening. Congratulations on a good quarter. I first want to start with a bookkeeping question. What I see in the balance sheet, both for the consolidated and the standalone results, is that the trade receivables have almost doubled. I was curious what color you could paint around this. Is this happening because of international operations? Is this just the seasonality effect, or am I putting emphasis on something which is not really a thing for you?
Trade receivable. We at granular level will come back, but looks like in the international market the currency play may be one of the reasons, because international has played well in this quarter. But more details we can come back to you.
All right, thanks. The second question is, I think, a continuation of a question the previous participant asked. So I'm more interested in the dairy-based beverages field. You guys spoke on the manufacturing side, so that is good to hear. I was just curious on the physical distribution of this, because I imagine that the life cycle for dairy-based products are much shorter than carbonated drinks. And I also know that the competitive intensity specifically for dairy-based beverages is already high. So what can you add to us around how your physical distribution model is, and what do you see in the competition in the market going forward?
Well, two things. First of all, our time is the same. Actually, dairy-based products are longer shelf life than soft drinks. So that is one gap which you have to understand. Our dairy-based products are all 6 months shelf life. And there is no gas, so there is no dilution of gas also. So actually shelf life is longer than soft drinks. Secondly, our distribution is same what we do, same trucks, same distributors, same people carry the product. and we have close to 1 million Visi coolers, which it is very easily accessible, and our dairy products go in that, which nobody in the dairy industry has. So, and nobody has this kind of distribution. So that's our bigger strength, and that's what makes it easy for us to put our products in the market.
So you're saying the physical infrastructure for supply chain distribution is exactly the same. There is no additional modification. Okay.
No, there's no change at all.
Understood. And the last question on this one is, anything you can add on in terms of volume growth and realization specifically for this dairy-based products?
This realization is higher. And what else did you want to know?
The volume growth.
So volume growth, I've told you, we didn't have capacity. Now we'll have capacity internationally. We are tripling our capacity, so we expect a good run next year.
Understood. And how high is the realization? Are we speaking like 20, 25, 50%?
About 15 to 20% higher.
All right, gentlemen. Thank you and all the very best.
Thank you.
Thank you. The next question is from the line of Sanjaya Satpathy from Ampersand Capital. Please go ahead.
Yeah, hi sir. So a couple of questions. The first one is that the slower growth that we saw in Q1 is essentially because of weather. But your commentary suggests that weather is not particularly a factor for rest of the year. So should one assume that your double-digit growth will come back from Q2?
Well, I can't tell you. We've done well in most of the territories where the weather was not affected. So hopefully, I would see no reason why not. If the weather does not play spoil so.
Okay. And my second question is that you have taken so many steps to push better growth in Gatorade. Can you just give us some sense of how things are there and what are the outlook?
No, we are looking very positively for Gatorade, but I think the real push will come for next year. This year we are just getting our products right and we have reduced the price, so now it's a product which every common man can afford to have it, which was mainly for the niche before. So we expect huge growth in it, but you will really see the traction next year.
And what is more to do so that the traction will be there next year? Can I just get...
Because we have to plan. This is not produced in every unit of ours. There's specific units which only produce it. And our capacities and our molds, everything has to be redone.
Understood. And so last thing that I just wanted to check is that you have already given a lot of color on your capacity expansion in fruit juice and the milk side, and I understand that the milk one is your own brand and Tropicana is the one which is by Pepsi. Considering that you will be getting into newer territories, is it just going to be supply, or you will need to do a lot more in kind of building the brand in geography before launching those products, and that's why the ramp up in those sales of those segments will not be that abrupt?
I'm not really getting your question properly.
My question is that you are getting into, not only you are expanding capacity in these two juices and dairy products, but you are also getting into new territories. So what will be your strategy to kind of gain market share?
We are not getting any new territories. No, we are in the same. Indian territory is the same. There's no expansion in territory.
States, you are not present in those states,
There's
right?
nothing except these products are being added because we didn't have manufacturing capability to go there. So now we are just going to add these products in these territories where we are already in the distribution. We have the whole setup. We just have to add these products.
And no need of any branding or anything there.
Of course there is branding, and that we will do. That's part of everything. Whatever we are doing, branding will be there. There is already branding going on for this. Advertisements have started. It will be much more focused because we'll have capacity.
Understood. And that is coming by March next year?
Next year.
Yeah, it will be coming by March or a little earlier than that?
Maybe a little earlier.
Okay. Thanks a lot, sir.
Thank you. The next question is from the line of Rakesh Roy from Omkara Capital. Please go ahead.
Hi, sir. Sir, my first question regarding, sir, a few years back you said you are not looking to expand your business in Africa, but currently you are expanding your business in like South Africa. Any reason? You are any change in
When did we say we are not expanding our business in Africa? We have never said that.
Okay. No, you are. I think, sir, 2 years back you were saying not looking to expand your business in Africa. Only we are looking to only like Zambia, Zimbabwe, and Morocco only.
No, I have never said that. I'm sorry. Some misunderstanding. Because after India and these countries, how will we inorganically expand otherwise?
Okay. Sir, next question regarding, sir, are we looking to expand our product portfolio in Africa also? Because like a dairy?
No, that will always happen. Each country, has a different market, and we have to study the market and see what is practical for that category. So we'll be expanding wherever. Once we get in, our distribution is there. Whatever we can sell there, we will definitely expand. We have the portfolio.
Okay. Sir, next question, sir. Recently, sir, PepsiCo declared their result. They increased their guidance from 8 to 10%, sir. So, sir, can we assume that our second half or S2 will be better than H1 or higher growth?
H1 our growth is 11%.
Yeah. On S2 we are looking same like a growth, 11-12%.
Well, I don't know. As I said, whether I can't dictate, but there's no reason why we should not grow.
Yeah, definitely, sir. Yes, sir. Sir, last question, sir, regarding, sir.
Control the rain gods. I'll take care of the rest.
Yes, sir. Sir, last question, sir, regarding, sir, apart from Africa, any other territory or geography we are looking where PepsiCo is doing the work, like the same like Africa we do? Like South Asia?
Right now we are looking for expansion in Africa only. Wherever we get a good territory and it makes financial strength for us.
Okay. Thank you, sir. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Amit Purohit from Elara. Please go ahead.
Yeah, congratulations, sir, and thank you for the opportunity. Sir, just on the international business, wanted to check, have we changed any distribution-led initiatives which is helping us to probably drive the growth even faster from here on? What is driving this very strong growth of almost like 30% in volumes? Last 2 quarters have been slightly lower than this. So just wanted to know that.
No, definitely we are, whatever practices work for us in our key country, India, and we feel can help us in other territories, Africa or other regions, we definitely try and duplicate that and try and do the same. So we are always finding new innovative initiatives, even for countries in Africa, and which is helping us.
And would you be able to share, sir, what would say 2 years back, what would be our reach in those markets compared to now? I understand that those markets are different, but still.
Very difficult. Each country is difficult. Excuse me, sorry. I think each country is different. It's very difficult to bifurcate each country.
And there is no seasonality much in these markets, right? So
there is seasonality. The only thing is it's a reverse seasonality. Their summer is November, December, January.
Okay. And just on the India business juices part, I wanted to understand, would Tropicana and dairy would still be mid-single digit of our total volumes? Is that a fair right now?
Yes, approximately. But maybe a little less, but very close. Okay. Between juices and dairy, it should be 7-8% at least.
And in the international market right now, we are not looking to get into the juices part, right? Or
we might, but not at the moment. Right now, there's so much scope to do without that. Once we complete that, then maybe we'll look at it, because we have to also look at how much capex we want to put at one time.
Sure. Thank you. Thanks.
Thank you.
Thank you. The next question is from the line of Robert Lee from Kasana Capital. Please go ahead.
Hello. Just a question on South Africa. I'm interested in what particularly attracted you about that market, and exactly what the CBD kind of market structure is there. I'm aware that Bev has a position in with Pepsi. I just wonder whether that's exclusive or whether you have other opportunities related to Pepsi there, and how the broader competitive structure is in that market, please.
Well, as I said, it's a bit too early, and I think we're still looking at the market, talking to Pepsi, and looking at our people are looking at the market. I think maybe as soon as we have something streamlined or something happens, then we will definitely come back and tell you what we are doing and when we would be doing it. At the moment, it's still in the air.
So what exactly is? So why South Africa? What's the particular attraction?
That's other large market which we feel. We are in the southern part of Africa. We are in Zambia, Zimbabwe, which are very close to South Africa, and that's the belt Pepsi would like us to look at. So we are looking at it, but at the moment it's a bit too early. Nothing has been agreed. Nothing has been finalized. So we're still looking at the market and the conditions, as Pepsi is very weak there. So.
Thank you very much.
Thank you.
Thank you. The next question is from the line of Sumant Kumar from Motilal Oswal. Please go ahead.
Hi, sir. So, can you talk about any operational efficiency left post acquisition of South markets, and any the benefit of operational efficiency in H1?
No, absolutely, and that's why you see that even North was completely rained out, that we have been able to do better than last year, maybe very slightly, but our results have been better. It's because of South and West and East. North was completely washed out this year, which is the peak season for North, actually.
Okay, but when we see the rainfall in some part of north side, it is still deficient. Say Odisha, Bihar, and
I don't know.
I'm talking about some pocket of north. Bihar, Odisha, and
North, nowhere is deficient this year. Bihar is not north. Bihar is east.
Okay, northeast. Okay, yeah. Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment. Please go ahead.
Yeah, hello sir. Just one thing which I missed in the call, I don't know if it was covered, this 1900 crore capex that we are doing, in which a large part is India. So in India, how many cases capacity that we are adding, and in that, how much will flow to juices and water?
So this is very difficult, and we would not like to bifurcate in that basis, because cases is a very complicated way of putting it, because it depends what size of bottle you are making, what each size has a different capacity. So to start calculating it will become, the only thing is we will have more than enough capacities to do double digit and even further growth. We will have enough capacities.
Okay. And we are constrained, whatever I'm listening to the call, we had limited capacity or constrained by capacity in juices and dairy, right?
That's right.
Whereas, so these are specific capacities for juices and dairy, and everything else is fungible.
No, the soft drink lines are different and juice and dairy lines are different. So in these plants, we are adding juice and dairy lines also, apart from soft drinks.
Okay. And this 1900 crore capex, the asset turn in this business, the asset turn in the capex will be 2x or less than that?
This is what we look at, approximately 2x.
Okay, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Jinesh Karia from Antique Stock Broking. Please go ahead.
Thank you for the opportunity. So first question is with regards to other income. Why is there a sharp increase on a YY basis?
See, there are various components in this, like one of that is foreign exchange, currency appreciation, depreciation. That keeps on fluctuating. That's one thing, majority of that we don't have control.
Okay. Okay, and the second question is with regard to the recycled PET that we have started using in some of the products in some geographies. So, two questions with regard to that. Firstly, what is the cost differential on a raw material perspective for that for us? And secondly, how much of the product portfolio going ahead we target to use recycled PET?
Well, long term, we are looking at least 25% of it, but at the moment it's too early. We've just started using it, and
the cost differential
is very difficult to say because it's a very fluctuating market. It would depend on what's the raw material and fresh price, and depending on that, there will be a cost difference, positive or negative.
So any color with regards to the material that we had used in the quarter, with regards to virgin PET, how much premium or discount did we pay?
That's what I'm saying. We just started using it. It's not even 0.5%. So it's too early to say. We've just tested it out.
Sure, no problem. Thank you so much.
Thank you.
Thank you. The next question is from the line of Onkar Gungarde from Shree Investment. Please go ahead.
In terms of competition, with the launch of Campa Cola, what competition and what kind of competition have you seen? What's the initial take on this?
I think it's a bit too early. I mean, we have to see what they do. We don't have, we are not aware of exactly what they are doing, how they are planning. So I think it's a bit too early. I think most probably next year we'll see some.
Since there were okay.
Yeah.
Another question was on the integration of South, North, and West, all the territories. You have said that.
Hello.
Yeah, my question was regarding, you have said that the seasonality factor is no more because of South and West integration. What exactly do you mean by that? Which you have
Well, the North seasonality is very skewed towards summer, whereas the rest of the country is not so skewed just in summer because even in the winters the weather is not so harsh. So that is what we mean by the seasonality.
Okay. All right. Thanks.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments.
Thank you. I hope we have been able to answer all your questions satisfactorily. Should you need any further clarifications or would you like to know more about the company, please feel free to contact our investor relations team. Thank you once again for your interest and support and for taking the time out to join us on this call. Look forward to interacting with you all soon. Thank you very much.
Thank you. On behalf of Varun Beverages Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.